So, in order to work out how much money would be raised by a financial transaction tax, we actually need some numbers on what the level of transactions are. And this is where there's a real problem, because actually there aren't very good figures about what financial transactions are going on at the moment. One of the best places is the Bank for International Settlements, based in Switzerland, which produces an annual report on 23 countries, selected countries, where you can find in a big report, 558 pages of it. You can also download Excel files and so on. And by doing that, I was able to compile numbers for the 23 countries. This is amazingly, the numbers are all in there, but nobody bothers to add them up. So that's one of the first things I did. It's really very interesting. So, for instance, in the USA, the Bank for International Settlements has the following figures, which I've compiled by taking the various figures from different tables. And you can see that the total, for instance, in 2008, these are in US dollar billions, so we've actually got $3,452 trillion of transactions in 2008. It dropped a bit in 2009 because of the crisis. Going back up in 2010, I think almost certainly it's going to be well over $3,000 trillion in 2011. So let's take $3,000 trillion of transactions a year, and compare that with USA total tax revenue, which is 2.25 trillion. That means that the transaction to revenue ratio is 1,270 to 1. In other words, there are 1,270 times more transactions than revenue coming into the US government. And that means that all the current tax system could be replaced by a financial transaction tax of just 0.08% in the USA. Now, obviously, that assumes that imposing the tax at that rate would not affect the level of transactions. I think we can almost certainly assume that some transactions would drop out of the system, so it would need a little bit more. And it's very difficult to actually be sure how much of those, what proportion of those transactions would drop out of the system if you put in such a tax. But we're talking about a very, very low level of tax. It's only transactions that didn't make 0.08% profit at least on each transaction that would really drop out of such a system. Let's take France, another country in the BIS database. In France, the figures are a lot lower. These are in billions of euros. You can see the peak was in 2007 with 357 trillion euros. It dropped down again in 2009, but it's coming back up again. So let's say 250 to 350 trillion a year in transactions. We know that the tax revenue for the French government is currently 817 billion. That's a 367 to 1 ratio, lower than in the States, but still pretty sizable. Which means that an FTT of just 0.27% would allow, in principle, enough revenue to be produced to abolish all the current taxes in France. In the UK, the situation is even more impressive because, of course, as we know, the City of London is a major powerhouse for the financial sector. You can see here that in 2008, these are in billions of pounds, so we're at 1,151 trillion pounds in 2008. Unfortunately, you can see the figures for 2010 are incomplete. LCH ClearNet Limited, which reported 862 trillion pounds worth of transactions in 2008, simply failed to provide the numbers in the 2012 document, which was supposed to report the numbers for 2010. I was unable to find out from B.I.S. Why they failed to produce those numbers, but so that means that it's guesswork really for the final for 2010, at least based on B.I.S. figures. But let's call it 1,000 trillion pounds a year. Tax revenue in the UK is 540 billion. That's an 1,850 to 1 ratio, meaning that an FTT of well under 0.05% should be enough to abolish all taxes in the UK. Just think about that. If we break down, as I say, the BIS figures actually cover 23 different countries, and we can look at the different areas of transactions. Interestingly, the first table 8 covers things like checks and credit cards and direct debits and all the rest of it. But the other groups of payments are actually always selected interbank fund transfers, or selected exchange and trading systems, selected central counterparties and clearinghouses, selected central security depositories. So in fact, these figures are all underestimates. Because they're not reporting everything. Some transactions simply don't get reported. But nevertheless, for the 23 countries, you can see that in 2008, the total was something, these are in US billions, we got $9,569 trillion of transactions going on. As I mentioned, for the reasons earlier on, the figures for 2010 are wrong because they don't have things like LCH ClearNet Limited. If we take all the 23 countries that are covered, and if we replace the UK figure by something more sensible, and I'll come to, I'll show you in a moment where I get those figures from. These are the figures for 2010. I'm using GDP and revenue, government revenue from taxation as a percentage of GDP from the CIA figures, allowing me to calculate the actual revenue. And in the final column on the right, you can see the revenue as a percentage of the transactions. And you can see that overall, down at the bottom, across the 23 countries, you'd only need about 0.16 8% financial transaction tax to abolish all the other taxes in principle. There are 3 countries with very low figures. They're the US, United Kingdom and Belgium. As we've already seen, the US and the United Kingdom have massive amounts of transactions going on, and that's why we have such low figures. Belgium was also a major transaction centre. There are 3 countries with over 1% values. They're Turkey, Saudi Arabia and India, possibly because there's a lot in those countries. The levels of transactions using cash may be a lot higher than in other systems, maybe. So certainly the figure for Turkey seems particularly strange. But overall, as I say, the average of 0.168% across the 23 countries suggests that this is actually a perfectly viable way of getting government revenue. Let's go back to transactions in the UK. As I mentioned, the BIS figures are really not very complete. I've been working hard to try and get figures from other places about different types of transactions, and I've made a list here of various things you can find on the web, and the total is something like £1,760 trillion. This is for the year, which, given, as I say, tax revenue of £540 billion would mean that 0.031% FTT would be enough. So really, these are very small taxation rates that you would need to replace the current tax system. Don't forget that actually many transactions, even in these numbers, are not included. I've been unable to get information on LCH ClearNet's commodities transactions, and for instance, Barclays has their own exchange system, BAR-X, which never reports apparently what transactions are going on. In order to get information, you actually have to open up an investment account in order to get information out of them. So these are underestimates, definitely. So the real figure could be much higher. And in the UK in particular, there's what's known as shadow banking. These are massive transactions which are going on under the counter, if you like, without being visible. It's deliberately done. Transactions deliberately done to bias the markets and so on in a way which other people can't see. This obviously is not being reported at the moment. Transactions in Europe, by going through various things on the web, I've managed to get all these figures. Adding them up produces something. This is just for the across Europe, something like 4,000 trillion euros worth of transactions of documented transactions going on. And as there again, the numbers are almost certainly seriously underestimated. Another source of information is the European Central Bank. They have some quite detailed figures for Eurozone countries, and you can see the figures here. I've added up the numbers across the Eurozone. We're up at around 1,488 trillion euros of transactions, with total government revenue from taxation at about 4 trillion euros. This means that over the entire Eurozone area, an overall tax rate of 0.28% would be enough to replace current taxes. And interestingly, this shows that there's actually a perfectly viable way of getting a solution to the Greek problem. Transactions in Greece are actually running around 12,500 billion, 12.5 trillion euros a year, and total tax revenue is 85 billion euros. As we know, Greek taxation methods are remarkably inefficient, because there's a tradition of tax evasion there. But that means that with 12.5 trillion transactions, 85 billion in tax revenue, you could replace the whole lot with a 0.72% FTT, which would be very difficult to avoid, and you could scrap all the other taxes, which are clearly very inefficient. And interestingly, given the level of Greek debt, adding another 0.3% to the FTT value, in other words about 1% overall, would generate enough money to pay off the entire Greek national debt of 340 billion in a period of about 10 years. This seems to me a blindingly obvious solution to the Greek problem. Replace the current tax system with an FTT and adjust the rate so that it will pay off the Greek debt. That would be a perfectly good